time for this particular type of trade. So I'm going to go back to the last trade I could have taken, which would be right here. Okay? And you see that we have this short move up right here. Does everyone see that? Okay. And would everyone agree? Well, this is the pullback here. I want to find the one that, well, this is the pair. I got to work with what's here. I'll do it this way. I'm going to put this trend line in here. All right. Everybody see that trend line? Everybody comfortable with that trend line? Okay, it's not ideal, but I want to pick something so we can just talk over the mechanics of the trade. So ideally what you'd like to see is for price to break this trend line and then you take the trade short. So if I took this thrust move down into this area here, and let me measure it this way, it's about 240 pips. So if I copy this down here, we'd be looking to make some profit in this trade down to here somewhere. Now, unfortunately, we can see what has happened, so I don't want to let that affect how I talk about the setup. Okay? You work with me with that? Teddy, we're not talking inverse head and shoulders right now. Okay? And it's not an inverse head and shoulders yet because we don't have everything set up. Okay? So we have this trend line, and we want to see a break of this trend line to the downside. All right? Are we on board with that? Everybody agree with that? Okay. Now we're on a 1 hour chart. If I chose to enter, now my entry on something like this normally would be below this low, below the last low right here. Okay? And my stop would go out to the swing high, which is about 30 pips. Okay? Now, what we do with a sniper trade and how we kind of protect ourselves a bit is that since I know that this point is going to correlate to my trend line break, then what I want to do is put a horizontal line here across that bottom. And then what I want to do is I want to go to a lower time frame, and I'm looking for a short setup below this line. And I'll use the stop loss from the lower time frame, but my target will be based on the higher time frame. Does everybody understand that?
Repeat that.
Okay.
The last part, repeat that.
Okay,
please.
My stop loss is going to be, I'm sorry, my entry is going to be below the low of this wick. This was the last low of our trend line. Let me put the trend line back so you can see it.
Right, I saw that.
Okay.
I got that one. The last trend, I saw that. That I got. I know why you put it there. Now, you're looking for something, you're looking for it to break that in order to create a trade, correct?
Well, that would be my premise for entering the trade. Yeah, I want to get 1 pip below there, and then I want to enter the trade.
Okay. Go ahead. Now, continue what you said afterwards. I'm trying to make heads or tails of what you're saying.
Okay. Now, what I want to do now is, what's my stop loss? My stop loss here is going to be about 30 pips because you go to the high plus the spread. So let's say the stop loss here is going to be about 35 pips. Okay? But I got a potential for 200 pips. So that risk reward on this trade would still be very good. But I'm cheap. I want to use an even smaller stop loss if I can. Okay?
So what do you, 10, 15?
So no. Listen to me carefully. We're on a 1 hour chart.
Okay.
My take profit is going to be based on this 1 hour chart. Okay? I still want to take a trade below this line. So what I'm going to do is I'm going to mark this candle so I can find it. And then I'm going to go down to the 5-minute chart. And I want to look for an entry below this line. You understand that? I'm going to enter the trade at the same point, one tick below this candle low. But I'm going to do it on a 5-minute chart so I can use the stop loss from a 5-minute chart. Does everyone understand that? Gene?
Please, I apologize to everybody in the group. One more time.
Well, let's take what we know. What we know won't change. I know that my entry is going to be one tick below the low of this candle, because this was
Gotcha.
the last low that touched the trend line. So if I enter now, my stop loss, normally you would put it out at the last swing high, which would be here, plus the spread, and we're estimating about 35 pips. Do you understand that part so far?
That I understand.
Okay. My take profit is going to be based on this last push down. So my take profit,
Right.
I'm looking at way down here somewhere. Okay, and even with a 35 pip stop loss, I'm looking at about 200 pips in profit. So I'm still about 5-to-1 in my favor. So my risk reward is very good, even on a straightaway trade like this. Okay, you took a breath. I know that means that you're thinking.
Simply because you took and created a line parallel to the one you created recently where it started up on top and went down to the bottom, and you calculate about 10% difference, and that's where you got to the results that you're in now, correct?
Yes. If everything
And usually
that
that's second line, that one line that you just created, the yellow line dropped, that one, if you put it back up on top where you had it before on the left-hand side, it equates a percentage. Yeah, quelequa.
I don't speak that.
Oh,
Whatever you said.
it's French, sorry.
Okay.
It's French, sorry. Okay, so that usually equates to 10% of the other one. Okay.
No. What I'm saying is you take 10% off of this line and use that as a rough guide for your take profit. Because the market doesn't always... Yeah, okay. So within 10%.
Yeah.
And you see, I'm placing it at this line as my entry. Do you understand that? I'm placing it where I would have entered the trade, and my potential take profit is down here. Okay?
Gotcha.
All right. Now, my
real
stop...
quick, you don't care... Sorry.
Go ahead.
So you don't care about those just stop loss, and you expect that you might lose 20, 30 pips or your stop loss, but you're basically on your trade is based on gaining 150 pips or whatever it is on here. I can't see it on the other end, correct?
Well, yeah, this is about...
You just want to create a stop loss.
What I want to do, my trade is based. My trades are always based on my stop loss first, because that's the part that can hurt you. Okay, so I always think of what my stop loss is in relation to what my take profit is. Remember, I said if when you go in the store, you buy melons, you squeeze it, you sniff it, and you look at the color. If it looks good, you put it in your cart and you buy it. Okay, same thing with a trade. I got to squeeze it, look at it, sniff it. If the trade looks good, I'll spend the money on it. So for me to buy this trade, it's going to cost me 35 pips. There's a potential for 200 pips take profit. Is that a good deal? Yeah, 6-to-1. I'll take that.
I would say so.
Now, it's not a guarantee.
Absolutely.
But based on history, based on history, thrust down, pull back, thrust down, I just might get it. Okay? So that's what I'm looking at. Okay. So now, this trade as it is going to cost me 35 pips. My thinking is, how can I get into the same trade but pay less money?
Okay.
You follow me there?
Yes, sir.
Okay, so how do we do that? Well, what I want to do is, instead of entering it on a 1-hour chart, I want to enter it. Just something about squeezing melons works for me. Mike, I can't get sidetracked with that right now, Mike. I got to stick with the one trade I'm trying to explain. Okay? So I want to spend the least amount of money I can for this. I know that below this line would be my entry. So now what I want to do, let me go down to a lower time frame and see if I can find an entry that would give me a smaller stop. So I mark the initial candle. I have my horizontal line here. Now I'll go down to a 5-minute chart, and you see what this makes right in here? The reason I call this a sniper trade, because this is a crosshair, where these two lines intersect. That's a crosshair, like if you had a rifle or whatever. Everybody understand that? I didn't explain that yesterday. That's why I call it a sniper trade. I'm pinpointing one exact spot that I'm going after. Okay? So I'm going to go down to a 5-minute chart, and I'm going to look for that that crosshair. Oh boy, the cell phone, the house phone, and I don't even know who this is. They'll have to wait. Okay, so I'm going to look for that crosshair. Now, you see here's my crosshair, right here. You see that? Are you guys still there?
Yeah.
Oh, okay. All right, so I want to enter a trade below this line. Now, there are a bunch of ways I can enter this trade. Now, here's where this system works well for most people. Once price gets below this line, you pick your favorite entry and use it. You got me? I'll give you the entry I use, but you pick your favorite entry. And that's how you get into this. This way you don't have to change anything in your trading style that's working for you. I'm just pointing out how to pick the attack point. I'm pointing out where to strike. I'm pointing out where the highest probability is to get into the same trade with a much smaller stop. Do you follow what I'm saying? Okay. So let's use the same setup that got us into this. Here's my higher low right here. This is my higher low right there. Everybody agree with that? Push down. And notice this was a black candle going the wrong way, but the low was not a higher low. That's why you got to have the higher low. Up here, you see this was a higher low. I hope you guys can see this. Is this clear on your computers, guys? You see that this was a higher low, but it happened above the line. And when we get into the candlestick construction, you'll understand why I want to wait until I'm below the line. Okay? And we didn't get into the individual candlesticks. So let's use the same method, the pullback method. So we go down, down, down. Here's my first pullback right there. Okay? Now I can enter this trade right here at the close of this candle. I can put my stop at this swing high. You got me? Or I can put my stop at back up here. You follow me? And I can use smaller stops to get into the same trade. Now putting my stop here may have got me stopped out right here. I wouldn't worry about that because, let's say I had a 15 pip stop here. Where am I? Oh, my entry was here, and my stop was here. I got a 15 pip stop. Well, it ends up being, let's say 15 pips. Okay, and I got stopped out. Then I would just simply wait for the next opportunity. You follow what I'm saying? So the next opportunity would be here, higher low. We're in a downtrend. This is my higher low. Now I can enter here, and now I go back up with another 15 pip stop. And now I'm in that same trade going for 200 pips, and I've got a 15 pip stop right here. And if we roll this forward, you'll see that along the way we went down. We went down as much as 94 pips. So most people would have grabbed something off the table by now. How I do this is What's beautiful about these trend lines is that you see these trend lines have the dot in the center of the trend line, guys. You see that? When I drew this trend line from the higher time frame, you see this dot in the center? This dot in the center represents the halfway point of the entire line. So I could have put my take profit a couple of pips above the halfway point. Yes, you could. You could still drill down even farther, Phil, and get an even smaller entry. But, as I said, use your favorite trade entry as long as the entire trade happens under the line. So in this case, we had a 15 pip stop, and it took us for a 75 pip take profit. That's about 5 to 1. Okay, let's take off the other 15 pip loss. We still walked away with a 60 pip profit. So you still walked away with 60 pips even though you had one trade that didn't pan out. Does everybody see that? And now we're going to do this on a few different pairs, because I want you to see that this works over and over and over again. And as I mentioned, use your favorite setup. You don't have to use the same setup. If you've got a favorite setup that you like, at least you know now this is the point where I want to take action below this line. No, Mike, no. I took half the trade off, and then whenever you take off half of the trade, you move your stop loss up to your entry point. So at that point, you can't lose anything. Yeah, George is saying the risk reward is key. You can still be wrong 8 out of 10 times and make money. And when we talk about trade management, because trade management is different than money management, but they work hand in hand, okay? So, and I'll give you a simple example. Yeah, you got 60 pips, Mike, but on half the money. And, Mike, just to amplify this, we didn't go into trade management. If you guys don't mind, can I just get off this topic and just talk about trade management for a minute? I just need to know yeses. I just want to get off of this. Okay, and even with that, Mike, what you lost compared to what you gained, you still come out ahead. The trick is to come out ahead of the game, Mike. You're worried about getting every pip back and getting every pip for pip. The trick is to come out a winner. Trade management, Phil, and money management work hand in hand. Yeah, Mike, but you got to understand, if you do this on 4 or 5 pairs, and let's say you did this on 5 pairs and all 5 lost the first trade and all 5 won the second trade, you still got good money. You understand what I'm saying? You can't get wrapped up in every single pip, because it will drive you out of your mind completely. Okay? So I want to make sure you understand it, because Mike is kind of saying that, when we took the first loss, we lost it at full pips. But when we split the trade, we're getting half of that, if you get what I mean. But the first loss was 15, but our ultimate goal, our ultimate win overall was 70, 75, whatever it was. All right? But I want to show you now an aspect of trade management. It's a mind game. I chose 1 to 10 risk reward ratios. Why does that thing keep blowing up? Did that happen for everybody else? That box just got huge. Okay, I'm not sure why that's happening. All right, but these are the bugs you have to work out. But again, I thank you for your patience. But now let's talk about trade management on this, okay? Let's assume you wanted to, our entry was right here. All right, let me clear some of these lines up. Now I only want to take these 2 off. All right, I'm going to go through this slow. This is a bit of a sidetrack, but it's kind of important. Let's assume that your entry was right here. Okay? And you wanted to take some of the trade off. what you could do is, as you're in this trade, you let it come down, you let the pullback happen, and this is key. Once this pullback happens, and this pullback is complete when we trade below the last low. After this pullback, when price trades below this low, you can bring your stop loss. You can bring, cooperate please. You can bring your stop loss from here down to here. Because once we trade below this low on this candle, price is never coming back here. Most of the time it's not coming back. Let me put it to you that way. So now price drops down again. Price pulls back again. Once price trades below this low, we now can move our stop down here. Do you see that? And now price pulls down and it pulls back again. And then when price trades one tick below this low, which is right in this white candle, we can now bring our stop loss down here. And now price pulls down again, pulls back, and we wait for it to trade below this low, and it didn't. So you could realistically bring your stop down here, bring it down here. But do you see how using those swing highs and swing lows, and I mentioned earlier it will come into play in money management, okay, and trade management. This is a way you can trail your trade down safely and lock in some profits. All right, it's a little advanced, and we'll get to it later, but I just wanted to show you that I'm not leading you down, I'm not leading you up a staircase that doesn't lead anywhere. This all makes sense. All right, now, do you understand this, Gene, what we walked through? Now, Pavel is saying this is how he moves his stops. Okay, good. Let me just move up. Maybe when you put your mouse over the box, it expands it. Don't get wrapped up in that, Mike. You're getting way too bogged down in minute stuff that doesn't affect the trade. Okay, so Sean is saying, Lou, on higher time frames, how would you take into account news and economic announcements? When we talk about news trading, Mike, I will explain a lot of that to you. Yesterday we had the FOMC, and I took a few trades live because I didn't do any live trading because I was doing this. And I got 3 trades, one for 5 pips, one for 10 pips, one for 25, in about 10 minutes on the news. But I have a news trading thing I do on a 1-minute chart that I can grab quick bites back and forward once the spread settles down. Because during news, the spread always widens. So I let that first impulse settle down. Then when the spread gets normal, there's ways that I can scalp back and forward. And I'll get into all that. FOMC is a news event. It's the Open Market Committee here, Federal Open Market Committee. It's a news event in the U.S. Not trading news necessarily, but when you're looking for trades in longer time frames. No, if you're going to look at a trade in a longer time frame, you have to leave the news out of it, unless you just want to exit your trade before news. Okay? Sean? Yeah, if you're going to be in and by long time frame, I mean you're willing to hold the trade for a week or so. Okay, then you won't worry so much about the news because you're in it for the long haul. Gene, do you have any questions?
No.
Okay, Gene, give me a time frame and a pair.
Good Lord. We'll take We'll take 1 hour. I don't know. I'm just guessing at this point. We'll take 1 hour. Euro dollar.
Okay, 1 hour euro dollar. Okay, now I want you, Gene. Oh, I can't do the screen share thing. Damn. Okay, I'll just walk one through. All right. Yeah, no,
I can try to tell you.
Well, yeah, show me the last possible trade we could have taken on this chart.
The last possible trade?
Yeah. Yeah, I'm going to show you, Phil, a couple of refinements to the sniper. But I want to make sure that before I move on, that Gene understands what we're doing. Remember the rule: push down and the higher candle wick. When you're in a downtrend, you want higher candle wicks. So where was the last possible trade we could have taken here, using that premise?
Well, if I could draw a line, as the way you showed me, I would draw it across. Where's your cursor? A little up a little bit, a little up a little bit, a little up a little bit, right about there. Right? No, that's too high. I would have gone a little lower.
Here.
No.
Here.
Lower.
Here.
No, a little higher than that. You see where the candle is over here? A little higher, Lou. Right there. I would have drawn a line across there.
Okay, why? So let me draw the line you're talking about. You would have drawn a line across here.
Go across the other way too. Yeah.
What do you mean go across the other way?
Well, basically, look, again, I'm new. Pardon my ignorance, but I kind of like started looking at the chart, and I saw the lower part of the candle on the left-hand side, and I saw where this began here, and that's pretty much where I would have looked at.
Well, no.
From what I know, from what I think.
Gene, I'm talking about what we learned today about the higher closing, the pullback. What we went over today was the uptrend and downtrend and the construction of an uptrend and downtrend. And I know it's a lot, so and I got that. But I want you to show me where the last possible trade would have been based on that premise.
I can't give you that answer.
Okay, now can someone use there's up at the top of the screen, up at the top of the Adobe room, there's an icon with a guy holding his hand up. If you could just click that and show me that you want to ask a question, I'll let you
okay.
Show me where the last trade was. Or you could type it in, whatever. Okay, who is this accept? Someone was trying to grab control. Oh, Gene. Okay, go ahead, Gene. You got the mouse now. Show me where the last... Smitos, I think, hit it right on the nose. But go ahead. Show me where the last trade was based on what we learned today. Oh, I can't turn this phone off. All right, I'm just not going to answer it.
I'm working on it. Hold on. You know what? I'm gonna release control. I think it's something, but I don't want to say it yet.
No, you see, you're doing that damn thing again. You're acting like an adult. When you're trying to learn, you have to think like a childlike mind and be open.
I know. I don't want to look stupid. I don't want to look.
No, you were worried about being.
I didn't want to look stupid. I don't want to look stupid.
That's exactly what I said.
Okay. All right.
Learning. Look stupid.
Okay.
Trust me, you got plenty of friends that will tell me if I were to call him up, yes, he's stupid. So you that's already in the mix, okay? Look stupid. I want you to learn. I'm glad you said that. That's exactly what I was talking about. This is why adults get so fucked up when they try to learn something. I'm not trying to be mean to you. Believe me, I'm not trying to be mean. I'm trying to get the best out of you.
I can take it. Don't worry about it.
Good. Based on the rules we had, what was the last possible trade we could have taken? And don't anybody in the room get angry at him, because you'll get your turn too at some point. Trading is easy. Learning is hard, Phil.
I can't even draw the. I can't even draw the line on this bullshit in my system. I can't even do it. I can't even draw the line for one reason until I get until my desktop comes over. I can't even draw a line in this. So I'm gonna have to pass.
Okay. So let the control go. And all right, Shirley and somebody else had the right answer. Shirley, Sean, they're all saying 5 bars before the current candle. And Smitus had it too, I think. So 1, 2, 3, 4, 5. Gene, do you see what we talked about earlier today? You have a push down in the market, and then you have the higher swing low. I mean, you have the higher, this high, this low rather, was higher than this low. You see that, Gene?
Yeah, I see that.
Okay. This is where we would have put our trend line. That was the last possible trade we could have taken. And I'm going to put the trend line here. And I'm going to walk this through again. Now, I want to enter this trade one tick below this low, because that was the last low of the trend line. I want to go in one tick below that low. Okay? So I'm going to put a horizontal line across the bottom of that low. And very good, guys. You got it. Very, very good. Okay? I want to go one tick below this low here. All right? I want to enter below this line. And I'm going to mark this candle right here. Okay, actually I'll mark the next candle because I'm going to start looking at the open of this candle, if you got what I mean. But this is my crosshair right here. Where these two lines intersect, that's the crosshair. Everybody understand that? Any questions on that? That's why I call it a sniper, because I make a crosshair. Now I'm going to go down to a 5-minute chart. And I'm going to look for that crosshair. There is the crosshair right there. Now what I want is an entry underneath this line. Okay, and as I said before, you can use your favorite entry. You got me? You don't have to use mine. Whatever entry you have that you like, use that one. But I want my entry below this line. So in this case, there's a couple of entries, and I'm going to use the same method just to keep things simple right now, but I see 2 or 3 methods I could show you. Everyone agree with that? Okay, Daryl, you don't agree with that trend line? Okay, now Pavel doesn't agree with this trend line, and Daryl doesn't agree with this trend line, so I want to ask them why. You went from, I'm going down to the M5 to get into the trade. We're not talking consolidation right now. And no one said anything about 12 bars over the vertical. That's got nothing to do with this, Daryl. It's got nothing to do. I don't even know what 12 bars over the vertical means. That's got nothing to do with this. And forget the inverted hammers. You guys are just, you guys are digging holes for yourselves. No. You don't need 12 bars over the vertical. Daryl, you don't. And I'm going to show you why. What I asked for, and I want to be clear about this, does anyone disagree with this trend line? I'm just using the same method to take both trades. Does anyone disagree with this trend line? We have a push down, and then we have a pullback, a higher low. I moved my line by accident. Does anyone disagree with this trend line from here to here? That's all I want you to see right now. No, I'm not sure what you guys are looking at. So there's something I'm not explaining right. Here is our push down right here. You see that? And now this is a higher low than the previous low in a downtrend. It's the exact same thing we were talking about. This candle, let me blow this up. Maybe, I don't know, maybe it might be smaller on your screens or something. But you see, this is a higher low than this one. Okay, so now if I take this trend line and drop this in here, I'd be looking in the simple entry for a break of this trend line. Do you understand what I'm saying? I'm not concerned about the larger wick. And you're talking about this larger wick, am I correct? Someone was asking about the larger wick. You're asking about this larger wick, am I correct? This one, rather. The lower wick on the next bar. Oh, this one. Well, as price moves on, I mentioned this earlier, you can adjust this trend line if you have to. Do you understand what I'm saying? But this trend line would work for an entry. And if you want to adjust it, you can adjust it here until we get a break of the trend line. All right? But remember, we don't see this candle. At the moment we draw this trend line, we can't see this candle, Sean. And I'm used to kind of not looking in the future when I do this. So with most of us, we kind of look into the future and, oh yeah, but look at this, you know. But we don't know what this candle is going to be. Do you follow me, Sean? We don't know what this candle is going to be. Okay. So everybody understands. So our entry is going to be a break below the trend line, let's say. All right, or a close below the trend line. So our entry could have been right here at the close of this candle, at the open of this candle, rather, because, no, it would have to be here. The close has to be below the trend line. John, how about just taking the break of the horizontal line? I'll explain that in a minute, John. Okay? I want to make sure we get this clear, because it's actually very simple. If we enter here, and let me walk the trade through, because we're using the same trend line principle from the 1 hour chart, we're just bringing it down to the 5 minute. Okay? And that room, the chat blew up again. Why does that happen? Okay, Cam is typing. I want to make sure that I get everybody's input on this. And then I'll get into some refinements. I believe this is being recorded, Gene, and we'll get, you'll get a chance to watch it again. Oh, now everyone's asking me about all these different entries. Okay, we'll get into that in a minute. There are a million ways to get into the trade. And what I said earlier was, now that you know where you want the trade to be, you can use whatever method you like.
Hey, Lou.
Yes. Somebody's mic is really loud. Just open your mic or a laptop mic. It's really scratchy.
It's Dave. Why don't you use F12 when you're doing that? That way you're not looking in the future.
Oh yeah, I can do that in the future. That's a good idea.
Yeah, that way they don't. That way, when you draw your line, nobody sees it, nobody knows, and you can do your target, hit F12 every single time. That's a good way to back test stuff. So.
Yeah.
All right. I'll shut my mic. I'll shut my mic off now.
That's good. Well, when we do trade management, I use F12. Because in trade management, it's really important, because you can't see what the next candle is going to do. But that could be helpful here also.
Yeah, I would think it would be. All right.
Yeah.
Thanks. Sorry about it.
So keep in mind, guys, when I draw this trend line, you can't see the next candle. And you can use any method you want to get into the trade as long as it's below that line. Okay, now I know Darryl said you need 12 candles above the thing because of it's a 1 hour chart, but no. Okay, and I'll explain that in a minute. Okay, so had we entered here, okay, or one tick below this low, the last low of the trend line, or one tick below this one if we made an adjustment, as I think Daryl might have mentioned, we're here and our stop could go right here. Now we're looking at a 10 pip stop, and let's stretch it out with the spread, make it a 10 pip stop. You follow that? So now you're in the same trade with a way smaller stop. You follow me? And you still have that same take profit point out in the future. And we're still in this trade. So we technically could have been in this trade, let's say right here. Okay? And so far the trade has gone 23 pips and we're still in it. But we're still looking for that profit target on the 1 hour. Do you see that? We're still looking for the profit target on the 1 hour. Does everybody understand that? Because I'll go back over it again. It's actually very simple. And the key to remember is use the method you like for the entry. If you don't have a method you're comfortable with, then use the same pullback method. Because you know that it's repeatable, you know that it's reliable, and you can measure your moves. You could scalp a little bit. I mean, you could take this move from here to here, which was 14 pips, and you could say, you know what, I'll scalp 14. You follow me? Take some of the trade off, and then I can let the runner keep going. So you can use the same premise. You can grab a quick scalp, put your stop at break even, which would be your entry point right there, and then let the rest of it run for the remainder of the 60 pips or whatever it was. Is everybody on board with that? Everybody have any questions? Okay, you can use the same method. Now, just for argument's sake, I'm going to show you a couple of other ways that you could have got into this. And I'm going to go real fast. Don't ask me questions, okay? I just wanted to show you that there's many ways to skin this cat. And as you can see, because we're basing this on the higher time frame, we are it's heading in our direction. And let me go back to the 1 hour chart. I moved the line away. Damn it. Okay. Now, I want to answer that question about needing the 12 candles above the line. Was that you, Daryl? So now DJF is saying, so why not move sounds good? I'm not sure what that's all about. Okay. Why not move sounds good? Okay, no problem. Daryl, we want to enter below this line. Okay? This line is at the open of this candle. I'll put it right there. Okay? Do you agree with that? This is at the open of that candle. Okay? We're going to look for the open of the next candle after the trend line. Do you agree with that, Daryl? Okay. How many 5-minute candles are there in a 1 hour candle? And you pointed this out, 12. Right. So it's going to take 12 candles to make this, not 12 candles above the open. You get me? Now what I'm going to do is I'm going to put a line at the high of this candle, and I want you to see something. Why I wait to take my shot below the line. Now watch, I'm going to go back. Let me get rid of these. We don't need these in the way right now. Let me go back to the 5-minute time frame. Now remember, I put that mark at the high of the candle, and this is what I want you to see on a 5-minute time frame. You see that? You see these 3 candles? Those 3 candles are that wick on the 1 hour chart. You see that, Daryl? You don't need 12 candles above it. You kind of got it a little bit, off sync. The other thing that happens is, and I'm going to touch on candle construction here very briefly. I'm going to go, okay, I'll just explain it first. Oh, well, you did say something about 12 candles And I thought you meant 12 candles above the open. And I want to make sure you understand that, because then I'll explain why I wanted to take the trade below that line. Yes, it does. It takes 12 bars to complete on 1 hour. Yeah, I agree with that. I'm not sure what it is you were alluding to before. Maybe I misunderstood. Gene, you still with us? Gene?
Eugenio. I'm here.
Okay. Now, I won't be here tomorrow, Gene, but you can touch base with me by my Trader 101 email. Close 1 pip below 1 hour candle on 5 minute. 12 bars over from red vertical is where this hour ends. Well, yeah, you're saying 12 hours over this way, Daryl, am I correct? 12 hours in this, yeah, I got that. I agree with that. I don't have a problem with that. I thought you meant 12 bars above. Okay, so now, why do I want to do this below this line? Why do I want to take my trade below this line? Okay, and I'm going to talk a little bit about the general construction of a candle. I will go over that in more detail. I just want to wait for John's question.
Go ahead.
Yeah, John is typing. I just want to see what he has to say. John and Daryl are typing. To skip unwanted candles. Kind of, sort of, John. Okay, kind of, sort of. I heard someone just try to speak.
Yeah. Where exactly is he talking about now?
He's talking about this area. What he's saying is, in a 1 hour candle, there are actually 12 5-minute candles. If you do 12 times 5 is 60.
But does it have to? Is that a rule?
Is what a rule?
Does there have to be 12 candles
No, there are always 12 candles in a 1 hour chart. There are always 12 5-minute candles in a 1 hour setup. Just do the math. 12 times 5 is what?
No, I understand. The math is easy. No, I understand math. Math was my major in school, but it was. I have to understand. Remember, I'm a rookie at this. I have to understand why in an hour diagram, map, whatever you call it, why does there have to be 12 5-minute candles? You know, one candle can't go for more than 5 minutes. You know, I don't know if I'm looking at it a different way.
No. You didn't learn candle theory. Okay, and I can see.
No.
Yeah. Okay, I got it. Okay.
Maybe if you want to throw me a ball later, I don't want to waste people's time. You know.
No, it's not a waste of time.
I know these guys are a bit more.
Yeah, but you're one of Joe's guys, so I got to give preference to you. Each one of these candles represents what as far as time, Gene? What do these candles represent?
Well, you said 5 minutes.
Right. So this candle represents 5 minutes of time. And in that particular 5 minutes, it moved 5.5 pips. This candle, even though it's smaller and a different color, this candle also represents 5 minutes in time. So you'll get 12 candles to make up a 1 hour chart, to make up 1 hour of time, but the candles themselves can look drastically different. Do you follow that?
How they look is not the issue. The issue is that each one represents 5 minutes, however they might look.
Exactly. Each one represents 5 minutes. So at the end of 12 candles... Go ahead.
So in a 15-minute chart, there has to be 3 candles, whatever they represent, however they look. In a 1 hour, there's 12, and obviously in a 4 hour, there's 48.
Absolutely. You hit the nail right on the
Okay,
head.
got
No
it.
matter what they look like, no matter what the wicks are, no matter what the shapes are, you do the math and you know how many candles are inside a higher time frame.
Jesus, I had no idea.
I see. I didn't know what you
Oy
learned
vey.
from the other guy. I don't know, and I don't want to create
Well,
any headache. But now I see where I have to start with you, and that just answered a lot of questions as to why you're not getting it. So we're going to do a remedial class, or we're going to do a step one. But now I want to go back to Daryl, and so
sorry,
so
Daryl.
yeah, no, just absorb this for now, Gene, because see now I know where you are, so that'll help me teach you better. Okay? Okay, Daryl.
Thank you.
The reason I want to get that's my wife. I got to take that one. Hang on. Good morning. Okay, doke. Talk to you later. Bye-bye. Okay, that's the boss. That's the boss, the boss, the boss. Gene, stop apologizing. Okay? Stop apologizing.
Right
Right?
on.
Okay? Something about well, my whole contention is that women should really be treated well in this world. And that's one call I'll always take, because if you remember your Bible and listen carefully to what I'm going to tell you, women were the gift we were given. We were given them as a gift. Just keep that in the back of your mind. And we act like it's the other way around, but it's really not. Okay? So,
Is that why Solomon had 700 wives?
Yeah, he liked gifts. He liked Christmas.
I do too,
You know?
man.
All right? But it's still a gift. Okay? So that's just my way of looking at it. Okay? Now, so now we understand where Gene is. So from now on in the room, if I give a little extra time to Gene, bear with it, because I realize he kind of got lost in the sauce here. Okay? So Mike is saying, I think he's not quite clear that you can change the time and that it makes it... Yeah, I understand that, Mike. And we'll get that straightened out. Okay? So, now let me go back to Daryl, and I have to explain why I want everything to happen below this line. Now, to do that, I want to go to a 1-minute chart just for a second, and I'm going to go to like a pound yen 1 minute, because I want to see a lot of ticks in a hurry if I can. And look at this, the market's not moving at all. Just my luck. What and we're going to talk about general. Oh, this candle just started. Okay, good. What I generally want to talk about is the candle construction and how they operate. For all intents and purposes, let's just say we're in a downtrend at the moment. Okay, would everyone agree with that? Downtrend and consolidation. Does everybody agree with that? For the most part. Okay, so in a downtrend, we're going to be making down candles, short candles. If you look at what just happened, this candle was all the way up here. Okay? When you're in a down market, listen to this carefully. When you're in a down market, when a candle starts to build itself, it builds the top wick first. Now, you saw this candle shot up. Did everyone see when this candle was a tall black candle? Did you guys see that? And that candle's done, and all it did, it made the top wick first. Once it's done making the top wick, then it goes to make the close. You understand? So in other words, you see this candle right here in the middle? See this candle? It made the top wick first, came back to the close, came all the way down, danced around, made the bottom wick, and then from the bottom wick, the last thing that happened was that it closed right there. So when you're in a down market, always assume that candles will make the top wick first. And we just saw another candle open, and it made the top wick. It came back to the open, and now it's dancing around again. And all it did was make the top wick first. Always assume that a candle's going to make the top wick first. And you see what happened, how this candle closed? You see that? It made the top wick first, then came all the way down here, then danced around, and then it finally closed. But it made the top wick first. And we'll get much deeper into candle construction so you'll understand that. So now I'm going to go back to that, was that pound dollar? It's pound dollar 1 hour, I think. What was that, guys? Pound dollar 1 hour? Oh boy, did I lose the room again? Is it 11 o'clock? Oh. It was euro dollar 1 hour. Okay. Was it pound dollar or euro dollar? Euro dollar. Okay, let me go back to that. We had all our lines drawn. Okay. So now, Daryl, the reason I wait to get below this line is I want this top wick to be finished with its bullshit. You got me? I don't want to place my stop loss anywhere in this top wick. Let this thing dance up and down, dance up and down, dance up and down, because once it starts to trade below this line, I know it won't come back here anymore. Does that make sense? Okay, so now if I go to the 5 minute and I go back here, you see what happened? These three candles were that top wick. When this candle opened, it made these guys first. It made the top wick, danced around, went up, made another candle, came back, danced around. Once it got back to the open and started trading below the open, I was very comfortable that we're not going to come back to this high anymore. Because in a down market, the top wick gets made first. Okay? Yeah, Dan, I'm not waiting for the 1 hour candle to close. The 1 hour candle just started. I'm waiting to get into the 1 hour candle once it makes up its mind which way it's going. You follow me? And I'm always going to assume that the candle's going to make the top wick first. So I don't want to get into a trade unless that top wick is made. Once it's made the top wick and then it goes back to the open, from that moment on, now I feel comfortable taking a trade. Did you see what I mean? All right, I want to make sure you guys got that. I know you didn't have that piece of the puzzle. That's why I said, you know, I'm showing you basics. So you could take this and go look for trades tomorrow. You know what I'm saying? But I want to give you, like I said, I really took my time and broke this down. And I learned from a lot of different places. Like that 3 to 5 candle that I talk about, that came from Oliver Velez, Pristine. And that was good. But they didn't break down the pullbacks. They didn't break down the thrust moves. They didn't break down any of the other stuff. And I added a lot of that and got stuff from here and there. So again, in a down market, the top wick gets formed first. You don't want to place your stop up there before that top wick is done. You got me? And that's why I went to a 1 minute chart, just so you could see that that's exactly what happens. Now, does that happen all the time? No. But it's a good guideline to create the patience you need to wait for a really great setup. Now, having said that, it's 11 o'clock. I'm going to spend 2 minutes, and I'm going to ask you guys not to ask me questions, but I want to show you 3 or 4 different entries below this line. Is that cool? All right? And you can use whatever entry you want. Okay? The first entry could be a wedge, where you've got this thing going on here. You've got that thing going on there. Does everybody see that wedge? Just give me a yes or no if that makes sense. Okay, well, let's get rid of that. I won't talk about how to trade a wedge. That's a different lesson. The other way you could get in is by playing the consolidation. And that would be, you see the high and low of this candle? You'll notice that none of the next 4 or 5 candles could get outside of that high and low. So if I were to put a line across the high of that candle and across the low of that candle, look at that. All of these candles got stuck. I could wait for price to break that range. That's another way into the trade. Do you see that? Okay, same trade. Just, it's a matter of what fits your eyes. You pick your method, pick the method that works for you. I don't want to change that. If you got something that's working for you, keep it. I'm just trying to show you where you can apply it to get the most bang for your buck. I'll show you another method using Fibonacci expansion, okay? Where you take your Fib expansion tool, and there's a pattern here called the 1, 2, 3 pattern. This is the 1. This low is the 2. And this high is the 3. And I can put a Fibonacci expansion, and now when I have my entry, I've got target number 1 laid out, and I've got target number 2 laid out using Fibonacci expansion. Okay? You follow that? So those are like 3 quick ways, and there are a couple of others, but it's coming up on 11, and I've got a few things I got my regular life I have to get to. Now John is saying, look how much the next candle retraced. What next candle? You lost me. On what? The price trap, John? If on higher time, look how much the. I want to leave anybody hanging with a question, and I want to thank you guys for bearing with me. I want to give everybody, like a fair shot. You're talking about this, am I correct, John? Just give me a yes or no, John. Okay. You see how high this wick went? What I want you to notice is that when the candle closed, it closed inside this box, inside this candle. There's something about this price, the high and low, that's really powerful. Look at the next candle. It was a big, solid, strong candle. This candle was even bigger than the white candle. But at the end of the 5 minutes, look where it closed. Back inside this range. Look at the next candle. The next candle stuck its nose up above the top. But when the candle closed, where was it? Inside this high and low. Nobody made a dime in here. Did you see that, John? Then when we broke that range, then we were off to the races. Now we're making money again. And there's a way to do this. There's a way to analyze this. There's a way to find these also. I don't want to get too wrapped up in it, but I wanted you to see that there are many, many ways to get back into this, to enter the trade once you know where to enter the trade. Why is this not cooperating? Do you see that? Okay. So there are many ways to get into the trade. You pick your favorite. If you don't have a favorite yet, then use the same pullback method. Okay? Until you develop one. Okay, and then we have other stuff going on here. In here, you have inside bars in the direction of the trend. You've got a hammer here in the direction of the trend. See this hammer? This is a pin bar. Pin bar in the direction of the trend. That's a big clue too. You understand? There are a lot of ways you could have gotten into this trade. All I'm saying is, if you've got a favorite entry, keep it. I'm just showing you where to do it so you can get the most out of the trade with the least amount of risk. Okay, the candle after the candle that broke the line, that's this one. Am I right? Okay, what about it? You must know Mike Schumann. What about this candle, John? I'm just busting your chops, Mike. Okay, I don't know what you mean by if on a higher time frame. We're talking about entering this trade on the 5-minute time frame, but using the 1-hour time frame to give us a take profit point. John, that's what we're looking at here. You got me? We're looking at how do we enter this 5-minute time frame with the smallest amount of risk and put our stop at a logical spot that makes sense for the 5-minute. But what we want to do is use the 1 hour for our take profit. Okay, now just to help John out, and this will be the last one for the day, let's go to a 1 hour chart. And as you can see, this thing is starting to give us that extension that we're looking for. Okay, we drew a line here before. I guess I took it off, but this is the drop down, and I copy it. I'm gonna put it just underneath this line, and I'm still looking for somewhere around 35.30, and I'm gonna put a line in here for my take profit. So you guys can monitor this during the day, and my line is at 35. Let's say 35.30. Okay, let's say 35.30 is our target for this. You guys can keep an eye on that. Euro dollar 1 hour. We had a trade set up on a pullback, and we've got an exit at 35.30, and our entry. Let me go back to the 5-minute. We have a host of entries, okay? Because I showed you a number of them. Let me just go back here. We had a host of entries. Let's just pick the worst entry, okay? Let's say down here. Okay? So our entry was at 35.868. If someone could just write those numbers down and keep track of them. Because I got enough, Okay, 35.868 would have been our entry. Depending on how you manage your trade and manage your money, we could have taken some off already at 35.600. We could have taken some off at 35.600 already. Because remember, that dot right there, if you grab the middle dot, this line never changes in size. Okay? If you grab the middle dot. So that middle dot is the halfway point of this line. All right? Now, I was supposed to do consolidations today, but I didn't. Yes. Who is that, Phil? Yeah, Phil, go ahead.
Another credit?
I can't hear you, Phil.
They may.
Yeah, Phil, go ahead.
Okay. Si no se deja.
Someone's got a laptop mic, and every time they move their hands, it sounds like someone's wrestling in a cave or something. Phil, what were you trying to say to me? Okay, I don't hear Phil at all. I'm trying to wait for you, Phil, but I don't hear you. If you could,
it wasn't
could you
this
type?
Phil.
Okay, well, there was some. Oh, I thought it was Phil. It looked like Phil was trying to say something. The voice was very muted and way
not
off
yet,
in the distance.
but you're doing very well.
All right. I'm not leaving you with. And you're Joe's guy. Are you Joe's guy?
Yes, I'm Joe's guy.
Okay, I'm not leaving you in the dark
Yes,
on anything.
Phil.
Yeah, but you understand
Okay.
everything so far.
No, you're yes, sir. You're doing very well.
Okay. All right. If there aren't any more questions, I promise we'll cover consolidations Monday. Okay, there are several kinds of consolidations. I'm going to talk about what they are, and I'm going to break it down on like a DNA level, what kind of candles go into it, and we're going to create a trading method off of consolidations. And that should be maybe Wednesday or so. All right? I see someone typing. I just want to make sure before I say so long. Yeah. Okay, Matt. Yeah, share the link of the recording. Well, I first have to find out who's got the recording because there may be more than one. And what I'll do is, you know what? I'll post the link in this chat and I'll leave it open, so you can log in anytime later on tonight and you'll see the link and you can grab it. Okay? Well, we'll do it that way. All right, guys. And again, thank you for your patience. I know there's some things that are buggy with the format in the room and all that, but we're working all that out. But it's much more important that I know that you're getting the information. All right? And, Gene, we need to kind of start from scratch on a couple of things. All right? Because I realize now where exactly you are, and I want to make sure I get you properly situated, all right? So maybe
just
one
emailed
day,
you, so.
okay, one day next week in this room, we'll do a Gene room. A Gene day, rather. Okay? And we just start from very, and I'll let everybody know ahead of time, so if they don't want to show up, you know what I mean? They don't have to. You got me? But you need to start from scratch. Okay?
Yeah, I do.
Okay. Okay, guys. Excellent. I'm glad, everyone's, learning something. Just say good things about me to your friends. Let them know about the room. And we'll pick it up from there. And then by next week, I should have a link where I can post some PDFs, Word docs. I have different tools for trading and all that. And we'll take it from there. All right, guys?
You have a great weekend, Lou.
Thank
I'm
you.
going to work on it, believe me. You guys take it. I will not be here tomorrow. All right? So just be aware of that. I won't be here tomorrow. All right? I'll be here Monday. But, Gene, I'll talk to you over the weekend.
Have a great weekend.